Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
So this is SPX, right? Somebody asked about how far is this puppy going to go until they smack it back down for good reason with hard data or a missed fire trade deal, peace deal, tax cut deal. But the point is we came down into this 48.78, which was really critical support. We had our day of intervention right here on April 9th. We held above a critical level of this kind of 52.65. Even though we overshot it, we came right back in. Again, that's the market we're in, where we gap down and then we get bought. The point is we have definitely started to move higher. Today, we actually got caught with a pullback that got obviously defended at 10 a.m. on time. And 1, 2, 3, 4, 5, 6, 7 days. 7 days straight green, right? Closes. Very bullish as it relates to the grind is the bid is still getting put in there. And there's a little bit of liquidity. I talk about that often, which is another tell of mine, which is this indicator right here. We got back above the yellow line, and now we need to go back up an E-mini above 5,600, which is the April 2nd gap down. Anyway, the point is that's all the technical stuff of how we got supported. And as far as where we could continue higher, I've got, and you can see on a weekly, which is why I really like to go out in time, I've got this 56.70 area overshoot to 57.62 area. Doesn't mean we're going to stop there, but that's definitely where I would expect it would digest and really get tested. Now, the problem is we really don't have bulls, the heavy shorts that are protected for really good reasons covering unless we get and stay above that kind of 57.62, right? So they're going to hold their hedges. They're going to expect this big left shoulder, big head, big right shoulder kind of alley-oop and then head back down to 4,800, push through to lower levels. So this is really where we're going to start to get, I think, a test. 57.62, 57.50 area just for a level of this bounce before I start looking for something else. Bigger picture, we still have a massive amount of risk underneath the surface with falling dollar and with lots of deals that could fall apart. But when you were just talking about what's causing this market excitement, the market is not pricing in recession. Like you said, they're waiting, fundamentally speaking. They don't know how these companies are going to price in what's happening. And the trade impact is severe. BlackRock is already calling a recession a few weeks ago. Apollo, you were just referencing, says we'll have one by summer. Anyway, the point is they really don't know how to price in an unsustainable trade war with China. They hear Bessent behind closed doors admitting it's an unsustainable trade war, and they're trying to de-escalate. Just keep in mind, they escalated in the first place, they meaning the Trump administration. So how receptive China will be to this is anyone's guess, but they don't need to be. And so I'm on the other side when people say, oh, they have to agree to U.S. terms. Oh, no, they do not. And we have the great privilege of having a classical economist in Jeffrey on our trading desk who knows emerging markets, therefore the debt situation we have, and who also knows China better than anyone. So no, they do not have to do a deal. Anyway, the point is we definitely have money going home, which is, again, part of it's the feature, not just a bug. And this is going to continue. I don't think this is going to be resolved just because Mag 7 beats. But the market is definitely pricing in Trump folding or some type of deal. Congress also potentially overruling tariffs. So I forget who is leading the charge there to basically, remember, Trump has signed like 141 executive orders, 5 of which have been made into laws, and 200 lawsuits just in his first 100 days. The man has been busy, and he's also had a lot of pushback. But the point is, this is something that the Congress could overrule. I don't know the odds. I don't know Vegas odds. I'm just saying this is part of the equity bullishness, right? And then, of course, the Powell capitulation. Many are expecting Powell to do a normative cut, not an accommodative cut, but a normative cut. So this is what I'm really looking for as reasons why the market rises in addition to option flow. And then I'm looking for real economic consequences that are coming in from these tariffs, just like you were alluding to. And one of them is jobless claims above. It's actually 267,000, but in any case, we're not there yet. We're 222 for like years. So we need to really push this up higher and sustain it in order for real recession risk, not perceived, but real. And then pointing to your Apollo mention, this is the slide deck that I posted on Monday, which is, yes, they are pointing to the sharpest decline in earnings outlook since 2020, which, by the way, makes it easier for them to jump over. But Meta, I will admit, crushed it. Not a surprise. Anyway, we'll go over those in a minute. New orders collapsing, sharp reversal in corporate CapEx spending plans. Prices paid are absolutely rising. Consumer confidence isn't just at record lows, it is shocking. So again, this is what they say. What they're doing is they're front running lots of orders. In the meantime, we have behind the scenes, Meta is crushing earnings and they're still holding up the market until the next de-risking or unwind. And that could be from a yen carry trade. That could be from another sovereign debt shake and bake like we had on April 8th. It doesn't mean the coast is clear, but we've definitely been given a gift from this bounce, in my humble opinion.
We have. It is a gift, and it'll be interesting to see the flows of money going wherever it's going to go. If it's still going to continue to go east, leaving home or going home rather. So that'll be interesting, because if they take the opportunity on this bounce to really step it up, continue to sell, that'll be interesting. I have this feeling that, some may reconsider. I don't know. You may think it's a bit more durable. It's certainly something we haven't seen long. Definitely a massive shot across the bow for U.S. assets. There's no question about it. I wonder if there's a reconsideration at some point, which could add a little bit of fuel from the bullish stance. Right now, so some of the things that I'm looking at and important for options, sometimes we talk about implied versus realized volatility. So implied is basically option pricing, and realized is how much are things moving around. And so the idea with options is you're trying to gauge, is the insurance cheap? Expensive, you can sell it, scalp that. It's kind of a carry trade. If it's cheap, that's when you can go long options and potentially use that leverage to your advantage. And right now, everything's coming up as cheap, but that's where you bring in that sort of extra sense that you should have as an option trader, and realize that it's only cheap because we're coming off of such incredibly high realized volatility. So we saw daily ranges at GFC levels. We've seen incredible amounts of movement. Meta, here we are back at 575, went down to 485, back to 575, back down to 500. Now it's back at 575. These are unbelievable moves for mass multi-trillion-dollar companies. So the volatility has been off the charts. And so that's what, if you look at a chart like this, like makes it a little bit bigger, this is something that like a quant who wasn't actually trading might look at this and go, look, implied volatility is really cheap versus realized volatility. But you have to be very careful, because that realized volatility is reflecting what happened a few weeks ago, and it is set to really come down. So that's always the risk, is that you think options are cheap and they may not be that cheap if we continue to trade in a much more reasonable range. So that's where you look at something like this and you go, okay, I get it. Everything looks cheap, but you have to temper that a little bit with the idea that it's a relative relationship, right? It's option pricing versus movement. And if movement is starting to kick out data of insane, remember we had those 8-10% moves, we start to kick out data like that, then this picture starts to change a little bit. So I think that's an important point to make. We can see, now I've got everything zoomed in. Here's cross asset volatility. We can see things really relaxing as we've taken doomsday off the table here. We can see gold vol, which was a little bit high. I've been talking to members about doing gold iron condors and things like that, given that, and I like to do things like that once they reach a level. And we've talked about this in the past on MSTR and some other things where, as things are starting to go parabolic, that's not the time to get in the way. You want to wait till it finds a level, it finds a little happy place that it can either find a bottom or a top. Then you can step in and play some of those short vol strategies like an iron condor, maybe credit spreads of that, something of that nature. So we're seeing a lot of these volatilities come down here. Credit as well. I think we've seen the credit spread sort of situations improve as well, Samantha. So that's going to probably put people at ease a little bit more as well.
For now. So I have a strong opinion about credit spread, since I called that in February and they widened 200 basis points. They're coming back down, but they're going to get busy again in July.
I'm going to change your middle name to For Now. It's going to be Samantha For Now LaDuc. And then it's like, oh, for now. Hold on a sec. For now, because you're always giving us these great things.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.